QuickBooks Online 2025, the Trial Balance Report. Get ready and some coffee because we're learning how to save time with the QuickBooks Online 2025. We are online in our browser searching for that QuickBooks Online test drive, the free sample company file available to everybody, looking for the result that has intuit.com in the URL because Intuit is the owner of QuickBooks. We want to choose the United States version of the software, and then we will verify once again with the check mark that we're not a robot and continue. I'm going to close that prior tab. We no longer need it. So now we're in the sample company file, Craig's Design Landscaping Services, opening up the major financial statement reports the way we do every time. The reports are on the left-hand side in the Standards tab. Within the favorites, right-click in the balance sheet to open in a new tab. Right-click the P&L to open in a new tab. Then we'll tab to the middle in order to close up the hamburger. And then we're going to go to the changing of the ranging, 010124 tab, 123125 tab. Select the drop down to see it in years. We want to refresh it, therefore we run it. 4, 24, 25 years are side by side. Let's tab to the right side and repeat. Closing the hamburger, close that burger, going from 010124 tab, 123125 tab. Selecting the drop down and going to years. Running it to refresh it. These are the major two financial statement reports, balance sheet, income statement. All other reports typically giving us more information about one or multiple line items of these two major financial statement reports. However, this time we're looking at a trial balance, which we can in essence think of as a simplified form of these two reports combined into one report, which can be useful because you'll note that our normal methodology of transactions here is that we use the first tab to do the data input. We use the first tab when we hit the drop down and enter any of these forms then creating a journal entry affecting at least two accounts. And then we typically pop over to the balance sheet and the income statement and just kind of double check to see what we thought would happen did happen. Now, the problem with that is now I have to have 3 tabs open, whereas it would be nice if I had all of the accounts on one tab, and that could make my data input possibly a little bit easier. And not only that, but I can have less long of a reports, shorter reports, in other words, by not having so many dang subtitles all the way down. That's the beauty of the double entry accounting system as it is expressed with debits and credits, which is actually more efficient than the accounting equation. That's why we use them. They haven't gone away. It's not like QuickBooks has removed debits and credits. They're still there. They're still underlined. They still can be useful. And even if you don't understand the debits and credits, the trial balance still could be a good report to drill down on information. So let's take a look at it. We'll go to this first tab. Now that I've worked it up, now that you're all ready to go, you're all fired up. Like, what? Let's take a look at this trial balance. That sounds like some good stuff right there. Okay, let's pull it up. I'll show you what it looks like now. Now that you're all fired up. And we're going to go down, all the way down, once again, to For My Accountant. Now, I think this is unfair for the trial balance because, again, I think this could be one of the major reports that everybody could use internally because it has all of the accounts within it. Why is it down here in the For My Accountant section? Because it has debits and credits in it, and therefore they're going to say maybe the bookkeeper doesn't want to deal with debits and credits because they want to see it in the format of the double entry accounting system. But even if you don't fully understand debits and credits, right-clicking, opening up this trial balance might be the way to go. So let's take a look at it and let's run this bad doggy, closing up the hamburger. Let's do it for 2024 to start off with. 010124 tab 123124. Run it to refresh it. All right, so here we have it. Now note a little bit of trickiness here, a little bit of something we have to keep in mind, that being that the trial balance has a reporting structure as though it's a balance sheet type report, meaning it's as of a point in time. Remember, in the balance sheet, assets, liabilities, equity report where we stand as of a point in time do not necessarily need a beginning date in order to create them, whereas the income statement is similar to the analogy of us seeing how far we can drive, say, in a day, in which case we reset the odometer at the end of each day. In reports, we reset the odometer, say, each year, starting over, seeing how far we go. Now, the trial balance has both balance sheet accounts and income statement accounts. So we're going to touch in on how could it be possible that it doesn't need a range when it includes income statement accounts. We'll touch on that in a second, but before we do, let's look at just the structure of it. It's basically kind of like the chart of accounts. If we looked at the chart of accounts over here in the first tab, going into the ham boogie in the sales area, going to the not the sales area, what are you doing? The transactions area, and then the chart of accounts. And you'll recall that the chart of accounts is in order by assets, liabilities, equity, income, and expense, the balance sheet on top of the income statement, and then more specifically by the more specific account types. Asset accounts being broken down into cash account or bank account, accounts receivable, other current assets, fixed assets, and then liabilities being broken out further into accounts payable, credit card, and then other current liabilities and long-term liabilities, and so on. That's basically what we have over here on the trial balance. It's just that it's not going to list out the account types. We have to just kind of see where the differences or the lines happen, where we go from assets to liabilities to equity to income, and then to the expenses. And it's not too difficult to see that because of the debits and credits. So if you don't know the debits and credits, that's okay, because it still gives you a differentiating component to go from one to the other. So asset accounts have debit balances. So down to here, you would expect these to basically be the assets, although you could have a contra asset of the accumulated depreciation. This is where the liabilities start then. They have credit balances, and so does the equity. So if I go down to here, landscaping, right here, here's where the equity starts. That switch is a little bit confusing. So that's going to be the equity section, opening balance equity, and then you have the income statement. So this is where the income statement starts with revenue line items. They also have credit balances, income does. These are all the income line items. And then the expenses are going to be here. Now, this is useful because then if I have just this report open as opposed to the balance sheet and the income statement, I can use this to kind of verify what is happening in one place. So if I posted something to the checking account, I can drill down on the checking account here and get right into that transaction report. If I reported a deposit in the checking account that recorded the other side to the income statement, I could go back and instead of going to the income statement report, simply scroll down on this report to the income line item and drill down on the other side. So that's nice. So that means that we can use this to have one report instead of two open, and it's a lot shorter of a report. Why? Because on the balance sheet and the income statement, I have all these subtotals. All these subtotals make the report way longer than it otherwise be if I just list out all the accounts in order. So that in and of itself is nice. Let's give a quick recap on how this trial balance comes about and where it fits if you were to construct these by hand. How would that work? If you construct the financial statements by hand, what is QuickBooks actually doing, you would think, behind the scenes if we were to build these things? We enter the transactions, which from a textbook you think about as journal entries. Within QuickBooks, we format these forms, the forms being designed to do the data input as easily as possible without the need to know debits and credits, but the forms then will post based on debits and credits, right? So we can imagine these forms enter the journal entries affecting at least two accounts, having an equal number of debits and credits for each transaction, which can also be expressed in equation format, having an equal accounting equation expression, assets equal liabilities plus equity. And so then we'll use that to create the general ledger, which would be kind of like the transaction detail reports. So we can imagine we post these to all the transaction detail reports, the general ledger. We use the end balance of the general ledger to build the trial balance from a debit and credit standpoint. So that's where it kind of fits in the construction. And then we take the trial balance and we use it, breaking it out from a debit and credit format to the financial statement format expressed in accounting equation to make it easier to read. But notice this debit and credit format is kind of more efficient to basically look at. So that's why, you might use this format instead. All right, quick other couple notes on the trial balance that makes it a little confusing. How in the world can it say that it's as of a point in time when it has the income statement down below? And the idea here is the trial balance, you kind of have to run it for the year to date because it's going to give you, that's what it's doing on the income statement. It's basically giving you the income statement up until the year to date. So you'll recall that when we looked at the balance sheet, you kind of have this issue where the net income is being reported in the balance sheet. But if you run the balance sheet for like 1 month and you compare that to the income statement for 1 month, the income on the balance sheet and this net income will show for the year to date. That's just how QuickBooks works. It's trying to close everything out on a yearly basis rather than on like a monthly basis. So the total equity would be correct if you thought about it as 1 month. Like if you want to look at this equity for the time frame of like 11/01/24 to 11/30/24, and I run it, then this income, the 95512, is not for 1 month of November. They still have it as a year-to-date number for January through November. In other words, if I run the income statement now for 11/01/25 to 11/30/25, did I do 25 or 24? 24 to 11/30/24, run it, then the income statement is here. Did I do? No, I did 25. Dang it. So 25 and 25. So this and now there's nothing in the income. So there's no income for that. But if I go for the full year of 01/01/25, that's where you're going to get the net income of the 1646. Now wait, I did this for 2024. I'm all messed up. Let's do this one more time. Let's try for 01/01/24 to 11/30/24. Running that, we get to the 95512. 95512. So this is running a year-to-date number here. Similarly, on the income statement, this is going to give you the income statement numbers after equity that is for the current year-to-date, right? So it's always going to give you the year-to-date numbers, basically. So you can't really run it for 1 month, which is going to mess up reports. Like if you're trying to run the months, you can run the months like this, and you can see basically what it does here. Like here's the retained earnings. It's not closing anything out to retained earnings on a month-by-month basis, but rather it's giving you the income statement accounts for year to date. So as of September, this is the revenue from January to September. This is the revenue not for simply the month of October, but for January through October. This is the revenue not just for November, but the revenue from January through November. So, and nothing's being closed out to retained earnings. It will close out to retained earnings at the end of the year, and then it closes out. So that's how the system's basically designed. So if I go, let's go back to seeing it in years, total only. So there we have that. So then if I added these up, if I added up the income, this minus the expenses, I would get to the net income that's reported on the income statement if I ran the income statement for the same time frame, in this case, or 1 year time frame, year-to-date time frame, in this case, for 2024. Okay. Now, what would happen if I go to 2025? This income statement amount is going to roll into retained earnings, just like the balance sheet happens over here. See how you've got net income is going to roll into retained earnings? So if I ran this for the whole year, 01/01/24 to 12/31/24, run it, I've got net income of 432, negative 432. Okay, now let's do it for 2025, 01/01/25 to 12/31/25, run it, and you get the net income rolled into retained earnings. And then this is the net income for the current year, 2025. Similarly here, if I then change the date to 01/01/25 to 12/31/25, run it, then I'm going to now have a retained earnings line item of the 432. And then the income statement is the year to date for 2025. So it closed out 2024 to retained earnings. Now, what does that mean if you compare this to 2025 financial statements? All of the balance sheet accounts will be the same, meaning same assets, same liabilities, same equity until you get to the retained earnings. This retained earnings will not show basically the ending retained. Well, the retained earnings will be the same here as well, because if I look at the retained earnings, it's the same. But on normal reporting, it's not, because normally we don't report the income, net income on the report. We close it into retained earnings. QuickBooks is not doing that. They're showing you net income broken out separately as an attempt, or in an attempt, to show you the relationship between the income statement and the balance sheet. So we get the same retained earnings, which is basically the beginning retained earnings, that is all the earnings that were accumulated but not distributed out in the form of dividends or draws, dividends for a corporation, draws for a sole proprietorship. And then this is the net income for the current period, which is really part of net income. Similarly here, this is the retained earnings for all prior periods, and then you've got the net income that's being generated underneath it for the current period. So that's the general layout for the trial balance. We might use it a little bit more in future presentations to try to get an idea for it, to get used to it, because I do think from a bookkeeping standpoint, it's a useful report to use, because it is a little bit more efficient having one tab open instead of two when you're doing data input and trying to check your transactions.